4A was one of the bigger questions. It was a total of 11 marks, and it was basically done at the overall average of the exam of 49%, and the average on 4A was 50. So the question here said, can you prepare the general journal entries required to record the additional information? Narrations are not required. So what we have here is an extract from the trial balance, and it says pre-adjustment. So none of these figures include any of the additional information that we've been given. So we've been told about the drawings, and I think the best way to answer this question is to go through each additional information point, get our pens or highlighters, and tick the bit of the trial balance that this relates to. So in this case, it says drawings of 1200 were incorrectly posted to wages. So we want to go and highlight wages and say that's the figure we're going to need to use. Clearly, we're not going to need all the numbers in this trial balance. So if we just highlight the ones we do, that'll focus our study, and therefore we can get through this in the shortest amount of time possible. The next dot point said that the prepaid sales revenue of $2,700 has now been earned, so that will affect that liability there for $3,500. We've got a vehicle being depreciated, so we'll need the vehicle amount and the accumulated depreciation of the vehicle. And we also have a new vehicle being bought for $49,500 on the last day of April, which is the last day of our reporting period here. And lastly, that loan there is repayable at the rate of $24,000 per annum. So let's take one adjustment at a time. The first one was drawings of $1,200 were incorrectly posted to wages. So at the moment we've got a wages account with $95,000 in it. And what we can see from that information is that that's too high. $1,200 needs to go out of that because it was incorrectly sent there, and where it should have actually gone was to drawings. So our first adjustment in the general journal will be debit drawings, credit to wages. The second piece of additional information, we've got a prepaid sales revenue account with $3,500 in it, and we've been told that prepaid sales revenue of $2,700 has now been earned. So that ledger now is sitting with a credit balance of $3,500. We take out what we've earned and we transfer that to our sales ledger. So in the general journal, we'll do a debit to prepaid sales and a credit to sales of $2,700. Adjustment 3, the vehicle is to be depreciated at a rate of 20% per annum using the reducing balance method. So what's important to realize here is that this trial balance is pre-adjusted. So this number here does not have any depreciation from the current period. So our first task will be to go and do that. So we're told that we're using reducing balance, and the formula for that is to take the carrying value, times it by the reducing balance percentage. So to get the carrying value in this case, we'll take the cost of 35, take out how much has been depreciated so far, and we'll get a carrying value of 19,800. The percentage we're told is 20, so if we do 19,800 times it by 20, we get 3,960. The issue there is that that's for a whole year, and we're told that we prepare reports every 3 months. So if we divide that by 12 months, we're actually going to get a figure of $330 every month, times that by 3 months for the 3 months of this period, and we get a depreciation expense of $990. In the general journal, we'll do debit depreciation of vehicle $990 and credit to accumulated depreciation. So adjustment number 4 is by far the biggest one. We're going to trade in a vehicle and buy a new one. So this vehicle of $35,000 is going to go. The issue here is this number here is now wrong. This $15,200 of accumulated depreciation, we just added another $990 to it. So what we better do is update that number and take $15,200 plus $990 actually equals $16,190. So we want to get our pencil or pen and change that number. And the reason we need that number is because the new carrying value will be $35,000 less $16,190 is going to be $18,810. And why is that number important? Because we've been told that when we dispose of this, the carrying value is now that, $18,810, and we're only going to get a trading allowance of $12,500. So if we do the maths on that, we're actually going to get a loss on disposal of $6,310. The car dealer is giving us less for this vehicle than we think has usage left based on our carrying value, so therefore we'll have a loss on disposal. So where do we even start with this question? This question's all about remembering a procedure for trading in a non-current asset. So we just want to take it one step at a time and remember each of these 5 steps. And once we know those, we can just go through each one by one. So the first one is transfer the historical cost of the asset. What does that mean? It means that at the moment there's a vehicle of $35,000 showing as a debit. We don't have that vehicle anymore, so we're going to do a credit to that account, and we send it to an account that exists for one day only called disposal of vehicle. We do a debit there of $35,000. Now that we've remembered step one, we can go to, or do it in the general journal, debit, disposal of vehicle, credit vehicle, and now we can go to step two. Transfer the accumulated depreciation. What does that mean? It means that now in that accumulated depreciation account, we had $15,200 at the start. We added $990, so that was a total of $16,190. Now that we've disposed of the vehicle, we don't need to keep depreciating it, so we'll shut down the depreciation with a debit, and then we'll send that to the disposal of vehicle account. So our general journal will be debit, accumulated depreciation of vehicle, and a credit to disposal of vehicle. Step 3 says record the trade-in allowance from the Sundry creditor. What's happening here is that we are trading in the vehicle to Kerr Motors. So what we want to remember is there's two types of creditors. There's trade creditors who sell us stock on credit, and there's Sundry creditors who provide us with a non-current asset on credit. If it's a trade creditor selling a stock, they go in creditor's control, but a Sundry creditor actually doesn't go in creditor's control. They need their own separate creditor's ledger. A trade creditor then therefore gets its own subsidiary ledger, whereas this Sundry creditor does not go in creditor's control. So which one are we dealing with? We're dealing with a Sundry creditor. This person has sold us a vehicle that is a non-current asset. So what we want to do is say, well, we're going to owe this creditor money eventually for the new car, but first of all, they're going to give us a bit of a discount or a trade-in allowance off the total amount owed for the new vehicle. So we do a debit to their account, which will decrease it effectively when we get to the end of our procedure. Now, every debit needs a credit, so we're going to send that credit to the disposal of vehicle account. So getting our general journal, we'll do a debit to Sundry creditor Kerr Motors. We want to write that in full. We're not going to write creditor's control. We don't need the subsidiary ledger columns. And then we have a credit to disposal of vehicle. Step 4, record either a profit or a loss. So we updated our carrying value, figured out the trade-in allowance was much less, and we end up with a loss on disposal of $6,310. So when we have an expense, that is a loss that is going to be an expense, and expenses go up on the debit side. And what that means is the credit will show up in disposal of vehicle like that. Now, a good way to check whether we're right, if we do a little ledger in the margin or on a scrap piece of paper for disposal of vehicle, we know that this ledger at the end of the day has to balance to zero. So if we add up both sides, we've got $35,000 on the debit side, $35,000 on the credit side. So clearly we've done this correctly and our numbers balance. In the general journal though, we need to do a debit to loss on disposal of vehicle and a credit to disposal of vehicle. Our final step is record the purchase of the new asset. So we're told that we're going to get a new vehicle for $49,500, which includes GST. It's on an invoice, so therefore it's on credit, and we got a trade in for $12,500. So what that means is our business, we had an old car and we're going to get $12,500 from it. We're going to give it to Kerr Motors in exchange for that new car for a total of $49,500. And what will happen is, instead of owing $49,500, we take out what we've been given as a trade-in, and we only owe, in this case, $37,000. So what we need to do, there's our ledgers that we've got so far, is update those. So we will actually owe Kerr Motors $49,500 we'll do as a credit, but we won't actually owe them that amount because we've already put in this debit here of $12,500. So between those two, they actually do equal $37,000, which is perfect. Now we have a new vehicle. We got rid of the old one for $35,000, so that vehicle ledger would balance to zero. We're going to put in another $45,000 because that would have the tax taken out of it, and therefore we'll have GST of $4,500 as well. So we've got two debits matching one credit. So in our general journal, we'll do debit vehicle, debit GST clearing, and credit to Sundry creditor Kerr Motors. Again, Sundry creditor is not creditor's control, and we don't touch the subsidiary ledger at all. Looking at the marks for this question, there were 11, so just going through our adjustments one at a time. The first adjustment for the drawings, the total was 1 mark for both of those entries. The prepaid sales and sales adjustment was 1 mark. The depreciation for the vehicle, the bit that hadn't actually been accounted for, was actually 2 marks. You got one for the debit, one for the credit, and therefore if your entry was correct but you had the wrong number, so your debits and credits went to the right accounts, you could still get a consequential mark of 1. Looking at the big adjustment, which was the trade-in, for step 1, we had 1 mark for both entries. Step 2, we had 1 mark for getting the updated accumulated depreciation, and then 1 mark for the credit to the disposal of the vehicle. So again, if we carried forward a wrong number from earlier, we will only be punished at the start. As long as we carry forward those numbers, we're going to get marks. Step 3, we recorded the trade-in allowance, and we got a total of 1 mark for that. Step 4, we recorded a loss on disposal, and we got 1 mark for both entries. And our final step was to record the new vehicle. We had 1 mark for recording the debit to vehicle and GST, and 1 mark to the Sundry creditor. So in total we have 11 marks. Looking at how this was answered, so we expect to see a fair range through all the different marks here. I think this is quite encouraging. 14% of kids got 11 out of 11, which I think is terrific. Given how much had to be done here, that's a lot of kids relatively were able to go through this step by step. The average is right in the middle of 5.5. The examiner's comments were, students need to have a good knowledge of the double entry system, debits and credits. Obviously we're doing a general journal here, so that was all debits and credits. We need to be able to record the disposal of a non-current asset in both the general ledger and in the general journal. So in this case we did the general journal. If you look at past exams though, you'll see that you are sometimes asked to do just the disposal of asset ledger, and it actually requires the exact same knowledge. It's just answered in a different way.